Hello, everyone. Welcome to the Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my co-host, Matt Nadeau, with me.
Hey, everybody.
And we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here locally in Barrington and serving the greater Chicagoland area. And our fiduciary obligation of putting our clients first is the tenet of our company philosophy, and it guides every decision that we make. And as an independent firm, we truly have the freedom to focus solely on you, not some big corporation.
And as always, we just want to take a moment, say hi to all of our clients. We know you're listening. We appreciate the trust that you've placed in us. And of course, we love every one of you. So for our show this week, we've got a great show. There's a few topics that we want to dive into. Specifically, we want to start just talking about a few market events this week. Google has had some big news, really has made that company take off. Obviously, tariff drama doesn't go away. And then we really want to focus on a few keys, 3 of them specifically, on helping to decide the direction of the market for the rest of the year. And then later in the show, we're going to dive in. We're actually going to talk about something called IRMAA. And it really is, if you're not familiar with that phrase, something that can impact you in retirement, where you might end up paying a lot more in medical expenses for your Medicare, and you don't want to miss that. We're going to talk about what that is and how to avoid problems with it.
Sounds like Hurricane Irma.
Yeah, it is a hurricane when it hits you.
You want to avoid it, just like you want to avoid hurricanes.
Yeah.
Before we start, though, we also encourage you to follow our BN Wealth social media pages on Facebook and Instagram for any interesting updates and timely news during the week. Lastly, please subscribe to our weekly economic update newsletter that's called the 5-Minute Market Brief. It's extremely informative, succinct, and easy to read, and you can sign up for that on our website at bnwealth.com. All right, let's get into our first topic this week.
All right, drum roll, tariff drama. It's always tariffs. Now, we got to go back to Friday night of last week, and the U.S. Court of Appeals actually upheld a lower court's ruling invalidating the administration's tariffs that were enacted. So practically, right now, it hasn't had much impact on the markets, and there's 2 main reasons. First, these tariffs actually are going to remain in effect until the Supreme Court hears the final appeal and makes a ruling. And second, the administration has been working diligently, to dig through all of the annals and the laws and just to find something to justify those tariffs, including there was one specific called Section 232. That's what they used in the first term when they were doing Chinese tariffs on steel and aluminum and stuff like that. What I would say is we should expect that even if the tariffs are invalidated by the Supreme Court, then the administration will just find another way to use them through some other legal means.
It's got to be an ongoing issue for a little while here.
Yeah.
Next, we had Google news. So Google had some positive news this week, and shares are up 9%. Huge pop on Wednesday of this week, as a search engine behemoth received a very favorable court ruling in an antitrust lawsuit that saw both a forced sale of the company's flagship browser, Chrome, and the heaviest of any financial penalties. Both of those were avoided. Boy, it's great anytime you have some positive news in any type of legal battle. But by the way, Google is, of course, one of the magnificent 7 companies, very highly touted ones. And we invest in those 7 stocks, by the way, with a portion of our allocations in our Advance and Protect tactical strategies that we manage for our clients. And the Magnificent 7 this week have just in general, have been crushing it lately. Amazon popped real big on Thursday of this week.
Yeah, and I mean, the Mag 7, the Magnificent 7 are called that for a reason. They are the companies carrying this market for the most part. So we're going to talk about why they need to keep doing that, because there's 3 key market variables to watch. And maybe it's one of them. Well, you have to wait. You'll find out here in a second. But as we get into the final third of the year, we want to focus, hey, what are these variables and what are they going to be out there to determine the direction of the market between now and year end? So the big one I really want to focus on is stagflation. And are we going to get stagflation or not? And that really is looking at recent price data, is saying, yes, tariffs have pushed goods prices higher, but rising inflation doesn't necessarily mean stagflation. You could have a hot economy where there's a temporary jump in inflation, But if economic growth remains stable or accelerates, then in that instance, that's actually a market positive. So conversely, if we do see higher prices persist, but we get more slowing of growth, that is the worry. And that's when you start worrying about stagflation.
Doubt. Variable two. Are we going to get one Fed rate cut, or are we going to get a start of a cycle of cuts? And the market wants not just the expected one cut in September, but we want the start of a rate cutting cycle that leads to another cut this year, and then maybe 4 or 5 next year in 2026. The Fed could signal the start of a rate cutting cycle, or it could simply give the markets an insurance cut, a one and done. The former would be very good for the market, but the latter would not.
I call it a courtesy cut. It's like your great clips. You go in and just get a quick courtesy cut. It's not like the real deal where you get a whole, like they set you up and style it, make it look nice.
What's 1/4 point cut going to do? It's just
Yeah, they
optics.
need to. They really need to signal there's more coming because the
Correct.
market is expecting it. And in the third variable, we're getting back to those Mag 7, is tech outperformance. So tech-aligned sectors, AI, that's led this market. And we and others have documented how just a few stocks have accounted for more than half of all the year-to-date gains. But over the past 2 weeks, earnings have been underwhelming, like NVIDIA, Dell. And if doubts begin to creep in about all the market positives associated with AI, including massive, capital expenditure spent by the big tech companies, that would not be good for the markets.
So bottom line, as we start the final run into year end, these are the major issues we are closely monitoring and have a plan of attack for either scenario, because in our Advance and Protect tactical models that we manage for our clients, if the market continues to do well, like it is, we'll keep riding the trend. In fact, in some of our more growth-oriented models, like we've mentioned the last few weeks, we are actually currently pedal to the metal, 100% stock and equities, as all 3 of our buy and sell indicators that do a diagnostic check of the health of the market under the hood, those are all positive at the same time right now.
Yeah, but it's critical because if the market gets more risky and starts to deteriorate, let's say we do get stagflation or something crazy, we will get more defensive. We'll actually start reducing our stock exposure. We'll get out of the market and we'll find safe havens to go into, like bonds or cash. And that's a place we wait until conditions start to improve. And we actually feel in retirement, it is not the time to be riding a potential market crash all the way down to the bottom and then all your hard-earned money just dissipate and be gone. So having a process or a plan to limit the potential losses in a portfolio is paramount to us. You hope for the best, but you should plan for the worst. And it's part of our fiduciary duty of looking out for our clients and doing what's in their best interest. And I'll ask you, radio listeners out there, do you have a defensive plan to help protect your money from a potential market crash? And if you're hearing this and our investment philosophy resonates with you, and you don't want the same old buy and hold, and you're looking to have your money managed in a different way, then look no further. If you'd like to learn more about our Advance and Protect process, please call our office at 847-780-2980, or go to our website, bnwealth.com, and you can learn more about it and sign up for a free financial appointment with us where we can go over all of this with you.
But before we head to break, we have some very exciting news. At BN Wealth, we've been incredibly blessed this year to welcome a large number of clients since our launch earlier this year, many of whom we've had the privilege of working with for years, and some new faces too. So to celebrate this milestone, we are hosting our very first Client Appreciation Gala this September, a night to say thank you to the families that we serve. So join us for an unforgettable evening of fun, music, mingling, and memories at our California Dreamin' Client Appreciation Gala on Friday, September 26th. And it's set at a very stunning country club, and the evening promises great dining, dancing, and drinks in an atmosphere you don't want to miss.
Yeah, and it's going to be this amazing live music by a group called Sounds of Summer, and they're widely considered one of the best Beach Boys tribute bands in the country. So their music's iconic, timeless, and especially meaningful this year. So this exclusive event is open to clients only, But the good news is you still got some time to become a client. So if you want to explore becoming a client, contact us and schedule a complimentary consultation. We'll go over your full financial picture, your goals. If we can help you, that's great. If not, we'll still part as friends. So you can reach us online at bnwealth.com or call our office at 847-780-2980. All right, don't go away, because when we come back, we're going to talk about IRMAA. Welcome back. Thank you for tuning in. This is the Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. I mean, what's better than that? I'm one of your hosts, Matt Nadeau. I have my co-host with me, Ben Barzideh.
Hello, everyone.
And of course, we're founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive financial planning firm. We're located right here in Barrington, and we're serving the greater Chicago land area. And our company motto is do great work, have fun, and give back. And we believe that with prosperity comes charity, especially if the support goes to churches or charitable organizations that are helping local communities, and especially our local community.
Therefore, we are very excited to announce that in the upcoming weeks, we will be launching the philanthropic arm of our company. We call it BN Giving, and we don't just talk about purpose. We actually want to invest in your purpose with you. So if you become one of our clients and you are a faithful tither or a regular giver to a charity, as long as it's an official 501c organization, just let us know and we will match your donation up to 10% of the management fee that you pay us each year. And by working together with our clients and helping to support their causes with them, we'll be able to hopefully create an even greater impact.
Yeah, this is a whole movement we want to pioneer, and it's unique to our firm. And it is based around a culture of giving and a more altruistic way of doing business. And if we can work together to grow our client base with like-minded people, those who share our values and our vision, well, that's incredibly rewarding to us. So again, by the way, even if you're not a regular giver, that's okay too. We're still happy to work with you. But if this is something that's important to you and you want to explore how you can join our tribe by becoming a client, reach out to us online at bnwealth.com or call our office at 847-780-2980. All right, let's switch up topics.
Let's talk about IRMAA. And again, we don't mean Hurricane Irma, although this is just as bad potentially. Anything with IRMAA sounds a little...
It sounds terrible.
No. Sorry if your name is Irma out there. All right. Having extra income in a year can affect you in a multitude of ways in retirement. And not only by increasing your income taxes, but it can also cause more of your Social Security to be taxed. And it's called the Social Security tax torpedo. But it can also potentially reduce the amount of your deductions you're entitled to, like charitable or medical deductions. But if that wasn't bad enough, it can also cause your Medicare premiums to rise, and potentially in a huge way. And that's why we always stress how important it is to work with a professional like us, for instance, who understands these concepts and can try and help you not only avoid these big landmines, but also to structure your income or look for proactive ways to potentially even reduce the taxes that you have to pay. And we'll come back to that in a few minutes.
Yeah, so I guess let's step back for people out there just to understand what is IRMAA when we're talking about this. And it's actually Medicare income-related monthly adjustment amount. And it's a surcharge on your Medicare Part B, which is the medical insurance, and your Medicare Part D, which is the prescription drug plan premiums. Now, this only applies to Medicare beneficiaries if your modified adjusted gross income is above $106,000 if you're a single filer, or above $212,000 if you're a joint filer. And so what they do is they calculate this IRMAA, Medicare IRMAA for Part B and D, is they look at your income and it is calculated on a sliding scale. So in determining whether IRMAA applies to you, Medicare uses the adjusted gross income amount that you put on your tax return, but they go back 2 years. So it's 2 years prior. So IRMAA applies in 2025 if your modified adjusted gross income from 2023 is above those thresholds we talked about. So again, if you're single filer above $106,000, and if you're married filing jointly above $212,000.
So what are the 2025 IRMAA brackets? Well, since IRMAA is based on your income and your tax filing status, brackets for Part B and D are the same, but the initial amount you pay varies. And both the brackets and the additional amount you pay, they change each year. So in 2025, if Part B IRMAA applies to you, that means you have income above a certain amount, the amount you will owe will be added to your Part B premium, which is $185 per month in 2025 for most people. But for 2025 beneficiaries whose 2023 income exceeded those amounts of $106,000 for individual or $212,000 for joint. So if your income is above that, you will pay a premium amount ranging from $259 all the way up to $629, depending on income.
And that is each month. And that is for both spouses. So that adds up quickly. That's why you want to avoid it. So that's important because, again, we've talked about with Medicare Part B, the same thing happens with Medicare Part D, which is the prescription drug plan. Again, if you're above those thresholds we've mentioned, you'll pay an added amount on top of your plan's premium, which ranges from $13.70 up to about $86 per month, again, depending on income. So it adds up across the board. So understanding your additional income, how it's going to affect not only your Social Security, but also your Medicare premiums is critical when you're in retirement and you've got these income sources. And one of the big things that trip people up is when you look to do Roth conversions. People just think, well, I'll do it, sounds great. But if you're not calculating it correctly, not only could you cause your taxes to go up much more than just that extra amount you owe for conversions, but now you could also have these premiums go up. All of these extra costs can then negate the positive benefits that you're getting from, for example, a Roth conversion strategy.
And here's where it can further get confusing, which is that your taxable income is what we pay taxes on as far as your income taxes. So that's after the deductions and various type of reductions you have. However, what we're talking about right here, IRMAA, is based on adjusted gross income. So that's before you take your deductions, whether charitable or standard deduction. So you also have to factor that in there. You know, that's an important figure to make sure that you were aware of when you're looking at that.
That is a great point because we talked about in an earlier show this year that they've raised the standard deduction so much, especially if you're above the age of 65, where this kind of stuff starts impacting you, where the standard deduction is getting close to $50,000. And so your taxable income may actually seem like it's lower than what these thresholds are, but you don't get all those deductions. This adjusted gross income figure they use is before all that. So you really want to make sure you're doing your income strategies correctly. Whether it is sometimes if you need to take money out of, for example, a retirement account like an IRA or a 401k, if you need to do Roth conversion strategies, anything that is going to generate additional income. I ran into this with a client where he was going to get a bonus, like a payout as he retired. And luckily we were able to have him talk to the employer and split it out over 2 years because it was near the end of the year. So he avoided getting hammered with future Medicare premiums by splitting it up. So you need to understand this, work with somebody who understands it, and help you avoid these kind of pitfalls.
No doubt. And just one last thing on that. That's another reason why if you're giving money to a charity, if you're tithing, qualified charitable distributions, if you're above 70 and a half, can really help you out because they can help your adjusted gross income down, which will also help you with IRMAA. Now,
yeah.
But before we're out of time, we want to talk about some big stuff happening. We want to announce that we've been incredibly blessed to welcome a large number of clients since our launch earlier this year, many of whom we've had the privilege of working with for years and some new faces too. So to celebrate this milestone, we're hosting our very first Client Appreciation Gala this September, a night to say thank you to the families we serve. So join us for an unforgettable evening of fun, music, mingling, and memories at our California Dreamin' Client Appreciation Gala on Friday, September 26th. It's set at a stunning country club, and the evening promises great dining, dancing, and drinks in an atmosphere you don't want to miss. And you will enjoy live music by Sounds of Summer, widely considered one of the best Beach Boys tribute bands in the country. Their music is iconic, timeless, and especially meaningful this year.
Yeah, and it's important that this is a client appreciation event. So this is exclusively for our clients only. Now, we know there's a lot of listeners out there who are thinking about becoming a client, and guess what? There's still time to become a client, and we'll love to have you at our Client Appreciation Gala event. So to explore becoming a client, please contact us, and we'll schedule a complimentary consultation where we will look over your entire financial picture and your goals. That includes looking at your tax return to give you tax advice, like we talked about with IRMAA on how we can potentially avoid issues like that. And if we can help you, that's great. And if we can't, hey, that's fine too. We'll still part as friends. So you can reach us online at bnwealth.com or call our office at 847-780-2980. Please, we encourage you to follow us on our BN Wealth social media pages, Facebook, Instagram. You're going to get updates and timely news. Love to have you subscribe. Anyway, we're running out of time. God bless y'all, and we'll see you next week.